it. We gonna make it. We gonna make it. We gonna make it. We gonna make it. Hey, what's up, people? It's your boy, Mr. Trader Dot here. On what tonight on a Wednesday night. Tonight, people, we're gonna talk about this foreign exchange market, better known as Forex. I talked about pardon me. I talked about Forex a couple times on my previous podcast. So I got a couple inboxes. People want to know what is a Forex? What does Forex stand for? Can you make money off of Forex? And the answer is yes, you can. As we talk about all the time on this show, liquidity. That is a big word on Trader Dot. And the Forex market, people, is the most liquid market in the world. So we're gonna get into that lesson. So just tune in and let's go. We finna ride out, baby. TRADEorDIE.LIFE. All right. So the first question: what is Forex? Well, people, as I always tell you on Wall Street, the glare on the glass has got to come off. No glare, but I can't see that good, so you gotta work with it. But like I tell you people all the time, Wall Street is all about words and terminology. So Forex is foreign exchange. That's all it is. You're exchanging currencies. Don't make it harder than what it is. So again, what is Forex? Forex is the foreign exchange market. Basically, you're exchanging currencies. But yeah, so the Forex market is a worldwide financial market for trading currencies. Oh nah, Sean, the Kiss was there. You just came on a podcast late. Look, it's always there. We gon' make it. But yeah, back to the lesson though. Kiss always won. But yeah, so it's a worldwide financial market. So that right there should tell you that the Forex market has extreme liquidity. Because not most, all stock markets are only based in that country. For instance, NASDAQ and NASDAQ and NYSE, the New York Stock Exchange, they're based in here in America. So they only do their trading during American hours. See, the Forex is a worldwide market, so it is 24 hours open. 24 hours and 5 days, people. Say that again. That is the entire work week. That is from Sunday 5 p.m. to Friday 5 p.m. that the Forex market is open. And those are 5 days straight. There is no breaks. 5 straight days, 24 hours in a day throughout the world. So yeah, like I said, it's done online. Most Forex market trading is done online. And currencies can be bought and sold long or short on a continuous basis from Sunday 5 p.m. to Friday 9 p.m. Eastern Standard Time. It's always remember this, people. Whenever I say any time or time frame, it's always based off of American time, the Eastern Standard Time, pretty much the New York market, because New York is the financial capital of the world. Always remember that. So whenever you read an article or you hear a news article and it speaks a time frame, it's always based on Eastern time frame because again, NYC is a capital. So yeah. So the big thing about the Forex market is it is decentralized, which meaning there is no big bank, there is no big location. Again, stock markets are very central. I'm sorry, by their nature, stock exchanges are centralized locations. Like it has to be a central location where you can buy and sell your stocks. This is how it is. So you got the NASDAQ and the NYSE, New York Stock Exchange. That's the central locations. See, Forex, since you're dealing with worldwide currencies, there's no central location. So you don't have to go to New York to trade your Forex or Tokyo or London, England. By the way, those are the three financial capitals of the world: New York, London, England, Tokyo, Japan. And that's why when I told you I trade Forex, I stick to the euro/dollar, which is London slash New York, or the US dollar slash the Japanese yen, which is New York slash Tokyo. Now, as I'm going to talk through this podcast later, I'm going to tell you there's way more currencies. But me personally, and the advice I'm giving you guys as beginners to Forex, just keep it simple, baby. That's why I like KISS so much, because acronym for KISS is keep it simple, stupid. You know what I mean? Just keep it simple. Don't try to dive in the market, do everything. Just stick to the euro and the dollar. Those are the two biggest economies in the world. The two most fluid, most liquid economies in the world, or currencies, which means the currency constantly bought, constantly sold. So just keep it simple, baby. All right. Now the thing with Forex, It assists with international trade because your countries are trading against each other. You know, if a oh my God, I can't say the word for some reason. The camera, I get nervous. But it helps. That's a better word. I won't start saying help. It's one syllable. It helps with international trade. So, for instance, say I have my business trader die here in Harrisburg, which is in the United States, but I import Japanese goods. So to pay with them goods, I have to use Japanese yen. In order to get the Japanese yen, I have to sell my American dollars. That right there is a foreign exchange. See, foreign exchange was always throughout the world, but it wasn't until like 1975, I think. I forget the exact time frame. Hey, Sean, that's a great question. Just give me like a couple more minutes, and that's a great question. That's why I love you, baby. You always be on top of the game. Yeah, but Forex didn't come around to like 1975, the Forex market that we know now. But it's been around since the beginning of human time, basically. Like, for instance, when the Romans traded with the Egyptians, that was foreign exchange. You was given whatever currency they used in Rome to whatever currency they use in Africa. You know, because Egypt is in Africa, so they're Africans. So yeah, basically you're buying one currency and you're selling another. I'm giving you this in return for that. That's basically what it is. It's an exchange, people. Just keep the word simple. You're exchanging currencies. Basically, you buy one and sell another. Um, yeah, the difference in price between the currencies is the current exchange rate. Like I'm gonna get into that. I got screen shares and all. But matter no, we can do that now. Let's bring up this little screen share real quick. Screen share. Give me a minute, people. A minute. All right, so that's the exchange rate. Now, the exchange rate, like I say, I use the euro dollar. That is the exchange rate. So, matter of fact, it's going to be a two-part example. So, when you hear any quote from Forex, it's going to be a two-part quote because you're buying one currency, you're selling one currency. So, in this case, if I was to buy the euro dollar, I'm buying the euro and I'm selling the United States dollar, which means that I'm going bearish on the American economy, but I'm going bullish on the eurozone. Now, as I said on previous podcasts, bearish means down. I'm expecting the prices to drop. I'm expecting a downturn. Bull means up. I'm expecting prices to increase. I'm expecting an upturn in the market. I'm expecting an upswing. So yeah, so when you do that, so again, the currency pair is the euro dollar. If I'm selling the euro dollar, which means I'm buying the dollar, selling the euro. Like again, the thing with Forex is very important to remember. It's two currencies, so you're buying one, selling the other. So it's very important. See, a lot of people they think that you're buying a euro. You are buying a euro, but you're selling the dollar. So if both economies are good, you want to start searching for crosses, and that's something I'm gonna get into a little bit later. That was just a quick little primer on Forex, on the base currencies and the quote currency. So like again, the first currency in a pair is always the base. That's what it's based off of. So basically what I'm trying to say is, let me bring the screen share. Oh, it's up right here. It basically it means that one US dollar, I'm sorry, 1 euro is 1.1055 United States dollars. The real. Now, Sean, I'm not really familiar with currency. The real, it's not the Philippines. I know it's a cross. It's an exotic. Again, yeah, no, Sean, that's actually true. So he said theoretically, could there be some major event that will boost the real, for example? Like I tell you guys, I started trading in 2008. That was a great segue, Sean. Now, let me take the screen share off. I don't know if you guys remember Japan. It was a typhoon. No, it was an earthquake, but it caused a typhoon in Japan. So it caused the price of the United States dollar / Japanese yen to drop. It went from like 127 to like 84. Yeah, the Iranian real. Okay. Yeah, but this is part of your question. So that was a major event that completely affected the price of the yen. But when you check the fundamental analysis, it's not too strong in Forex, so I don't want to confuse you, but the Japanese economy, it wasn't doing bad. It's just that major event completely affected the price of the yen. And you're talking about cheaper currencies, bro. The Japanese yen is the third most popular currency in Forex. Out of all of them, it's 28 most popular. The yen is number three. That's a major one. And this earthquake slash typhoon completely affected their economy. So the price of the yen went down to 127 to 84. I bought right in. About 3 months later, it went back to where it was at. Actually, it went higher. It went to like 135, which meant that one United States dollar was 135 Japanese yen. Because again, it was USD slash JPY. As I said now, the first currency is the base currency. Quote, the other one is based off of that. So when you see that price, it means that one of the first currency is however many of that second currency. Yeah, they yen, Japanese yen. Now, I'm gonna get to your question, Sean. What we gonna do that now? Brexit. Brexit affected the Great Britain pound. Crazy, man, because British, there was the British was leaving the European Union. You know, Great Britain and Germany and France. They was the three strongest countries of the European Union. So Great Britain by themselves, they didn't really need to join the European Union, but by Great Britain joining the euro, it gave it more prestige. But when the British said that they was leaving the European Union, it made both currencies drop. It made because like again, I cannot tell you this enough. In all investments, you want to sell on the rumors and you want to buy the fact. Because when you spread a rumor, it's like in real life. Someone spread a rumor about you, your reputation is going to be damaged until you clean that rumor up. And investments, oh my gosh, any rumor. You can just put a rumor and say, plane stocks going to fall. Tomorrow, the price of some plane stocks will fall, man. Investments are really big on rumors. So you always think, sell a rumor, buy the fact. Yeah, but back to my lesson, getting sidetracked here. The Forex market, it has extreme liquidity. Again, next go to my other example. All right, let me find it for you first. We're gonna go over how much liquidity is really in this Forex market. It's crazy. It's $5 trillion a day. That's the combination of like all of the world stock markets 25 times over. And the reason why it's liquidity, as I said, because it's a worldwide market with more participants. Whereas a stock market, it's just the people in that country. The Forex market is the whole country versus another country. So just by default, you're gonna have more people, more participants. All right, let me go to the little screen here. Give me a second. Right here. All right, people, as we see, the average trading volume, like I cannot stress this enough, liquidity in Forex is crazy. You see, it's $5 trillion. That is just $5 trillion. That's a number. Can't even wrap my mind around that. You see, the world's largest stock exchange, the New York Stock Exchange, only does $22.4 billion a day. That is nothing for what is that? 20. All right, so 22 goes in 100. Say 20 goes in 100 5 times. All right, so off top, yeah, then it's 5 trillion. So that's 1 billion. That's five. That's a lot. It's not as a big number. It's a lot of volume. As I said before, New York, Tokyo, and London, or New York, London, and Tokyo is in some order. They're the three biggest. I'm sorry, they're the three financial capitals of the world. New York is one, obviously, because it's based off the American dollar. So we're always going to be the top country, no matter what's going on in the world. Don't ever let them tell you different. But so again, that is the United States dollar, Japanese yen, eurozone, well the euro. So you always want to you know check the daily volume of the forex market, man. It's tremendous. So stocks is really slow. For what kind of resources? Is this backed by gold? Hey Corey, what's up, baby? No, forex is not backed gold. No, it is the currency of the country, my friend. It's not backed by nothing. It is all right. See, forex is what you call a complete market, which means that it's based off the market rate. Whatever someone's willing to sell this currency for, you're gonna buy for. It's not backed by nothing. We came off the gold standard in 1973, I think, with Richard Nixon took us off the golden standard, and a lot of the world followed. So there's not too many currencies backed by gold no more. It's completely done by market, my good brother. Petrodollar, yeah, like again, everything is done by market, good brother. There's like that's the thing about forex. There's no big bank, so it's really hard to manipulate the price of a currency because it's too big. This is a whole country. Whereas a stock price, my friend, it's easy to manipulate the stock price. That is the one benefit. Well, actually, it's a lot of benefits between stocks and forex. I'm going to get to them now. That's a great segue. The first one, as I spoke to, is manipulation. Due to the size of forex market, man, it is really hard. It's impossible to manipulate like the euro slash dollar. You would have to have. You see, it does $5 trillion a day. So It's not that much money in the world. It's not, as a company, TRADEorDIE.LIFE Incorporated. My company got about, I don't have no shares, but say if I put my company on the stock exchange, we start with 1 million shares. It's really easy to pump a price. See, things with stocks, it's a thing called pump and dumps. You get all the people to pump the price up, and then you drop the price. And the people, I tell you all the time, you follow the big money. See, most people, when they buy stocks, they buy at the top of the movement. They don't catch all the moves. As I spoke earlier, it could be a $5 stock. Oh, that's a bad stock. I won't buy it. They'll wait till it go from $5 to $20. You want to buy. Most of the time, you bought at the top. So a bunch of those stocks, they're being manipulated, pumps and dumps. You might want to do your Google research on the pump and dump. It happens more than you will believe in the stock market. Whereas the Forex market is it's just impossible because it's too big, bro. It's way too big. Let me stop lying. Uh, Chinese are doing that now. They're manipulating the price of the yuan. It should be way higher than what it is, but the Chinese is keeping it low. See, this is why the Chinese economy is not as strong as people think. It's all manipulation. They're keeping the price of their currency purposely low so they can build trade. But as the time's gonna see, that's what this trade war is about with Trump. I don't want to get too many politics, so I'm about to stop this. But it's a lot more than what people understand with Trump and the trade war. Some of it is right, man. Like, but a lot of it is just But the Chinese, they're good for manipulating the price of their currency. Their currency is supposed to be so much more higher. And that China is like the second biggest economy now. It's like it's unfair. They're basically making their economy bigger by making their money cheaper, which means that when you deal with China, their price is always cheaper. So obviously you're gonna have a it's gonna build a larger trade gap because everything is cheap in China, and it's wrong how they really doing it. So that's what this trade war is about. I did not want to get into that on this podcast, but that was an example of how you can manipulate a currency. See, most currencies are from free world countries, so like a free world country, it's hard to manipulate, but a dictatorship, a totalitarian country where they control everything, it's not as hard because you just set the rules and people don't follow. The people get, that is in China. So it's not that great in China, people. Don't big up the Chinese economy because it's built on house and cars. So they're good for short selling. My friend Sean, he asked the greatest questions ever. That was my next thing. All currencies, brother man, all currencies. See, the thing with stocks and forex, it's called selling and going short. Now, but short selling is a completely different category in stocks. You have to get permission to short sell, actually. You have to call your broker. Even me, when I want to short sell an American trade, I have to put in a request to short sell. And it's like, yo, this is crazy. Forex, there is no such thing as waiting. You just buy, you sell, you short, you long. So yeah, short-term trading, Forex is great for short-term trading, Sean. It's also great for long-term trading, which I'm getting into, but it's better for short-term trading because again, the average daily volume, my friend, is $5 trillion. Like the price ranges in Forex, like this is gonna be a two-part podcast because tomorrow I'm gonna go to the different Forex brokers because I'm already 20 minutes in and I still got mad notes. So we're gonna tomorrow part two, Forex brokers. So as I told you before, basically in Forex, man, you're buying a currency and you're selling another currency. That's just basic, or you're selling the currency and you're buying another one. I want people to realize you're buying pairs. See, I think some people when they drop into Forex, you just buy that you see the first currency, so you think it's based off of that. No, it's a two-part equation, my friends. You always want to check both currencies, check the economy. So a great trade would be when you're dealing with a country that's got large exports to small imports, because the cash flows are going to one country, they're leaving the other country. So that's what, again, I can't stress. That's what this trade war with China is about. They're cheating. They are like rigging the game here, and they be we gotta stop them. Like I'm not a Trump supporter, but some things the Chinese are cheating right now. It's unfair how they can just make their currency so cheap, but their economy so big. It's like, what are you guys doing? That's not fair. See, the American economy is huge, but our dollar is so expensive compared to the rest of the world. That's why we have such a large trade deficit with China because it's so cheap over there. But it shouldn't be that cheap because their economy is getting so big. It's like, you guys are really cheating. So back to my lesson here. Now, the thing with Forex you guys need to understand is the bid and the ask price. Again, I don't know, I got a screen share for that. Let me go to Google real quick for that. I wasn't prepared for that one. I can explain that actually. So the bid and the ask price, basically the euro dollar, if it's being sold, if it's all right, if the buy price is 1.7, the sell price is going to be 1.9. So those zero point 0.2 pips, that is called the spread. So there's always a difference between the bid and the ask price. That is the spread. That is how the forex broker gets paid because there is no commissions on forex. Segue to my second example, while forex is a tad bit better than stocks, there's no commission. See, stocks is it's a commission. I mean, now all these brokers are giving you commission free trading. But back when I started learning trade, yeah, Eddie, trader die, baby. I seen a phone call. I'm gonna call you after the podcast, my man. But I was prepping for this podcast. But yeah, see, stocks back when I started trading, man, commissions was vicious. It was like, man, it was very expensive. Now they knock them down like $4.99. And some people don't have them at all. See, but forex, there was never a commission in forex. You just pay the spread, which is the difference between a buy price and a sell price, or sell price and the buy price. Whatever direction that you're looking to go long or go short in. So basically what I'm saying is whenever you enter a forex trade, you're always going to be in the minus at first. That's just every trade you make, no matter if you're caught in the middle of a trend, because the spread, again, the broker has to get paid. So those 0.23 pips is kind of what how the broker gets paid. So there's no commission in forex, and you can make a million forex trades a day. There's no commission. There's no margin. Well, there is margin, but thing called lots. This is tomorrow's podcast, people. So make sure you tune in tomorrow when I can go into depths about forex. This thing called standard lots, micro lots, and mini lots, which is affects your minimum deposit and the amount that you use that you're able to do per trade. Like forex is great, man. It's really like I started people out in stocks because stocks is a lot slower. You know, the forex is kind of the wild, wild west. But the thing about which I got to do the next podcast, going to be out the four, is going to be technical analysis. The thing about technical analysis, price points, candlesticks, pivot points, these are able to be used in any market that you go to. See, fundamental analysis is great, but it's kind of long and it's very just man, it's a headache. I'm not gonna hold you. But some people love fundamental analysis. And me, I cannot stress this. Day trading, we stick to technical price points. That's what I love about technical analysis. Is able to be applied to any market. So when we do the next podcast after the one tomorrow, Forex Part 2, we go over technical analysis. You're able to take these technical analysis and apply them to any market. It doesn't matter stocks, forex, futures, crypto, commodities. Because again, you're sticking to chart movement, price points. That's all you just read the chart. Don't stick to the outside noise. Just read the chart. All right, and back to the market. Now, the Forex market, again, is loaded with opportunities because it has extreme liquidity. Yes, you can do an option call on Forex, Sean, but okay, options are kind of weird on Forex. Don't worry, it's part two. And if we have enough time, we do a part three of Forex because it's a pretty good podcast. So yes, like I keep saying, it's loaded with opportunities, man, because it has extreme liquidity. It's really right now, man. You can trade at four o'clock in the morning, because it's nighttime here, but it's morning time in Japan, which is the third capital of the world, or the second. Some people have Japan, Tokyo over London, England, or it doesn't. It depends on your however you feel, but it's two or three. So three in the morning, 4 in the morning here. It's 8 in the morning over there in Japan. Their market's opening up. And the thing with Forex, whereas the stock market goes from 9:30 to 4:30, Forex is, like I said before, it's five to five, Sunday to Friday. So yeah, see, most traders only trade a few pairs. And I say for beginning traders, you want to stick to your few pairs. Like the thing with Forex though, man, there's so many pairs. Like I say, it's just a currency. So basically, you can do the euro versus Mexican, but the peso, the euro versus that. It's so many pairs, but the strongest ones are the 8 major currencies. So if you got a pencil and paper, you might want to write these down, or when you want to look at the podcast again, you can go over that. Of course, the US dollar, which is USD. So when I give those words USD, that is the initials that's going to fit in the quote. It's never going to be US dollar. It's going to be USD slash JPY, which is Japanese yen. So again, the top 8 currencies that traders trade the most. Now these are the big boys, or as again number one, the US dollar, USD. Number two, the euro, the European euro, which is the EUR. Number three, the Japanese yen, JPY. Number four, the Canadian dollar, CAD. Number five is the Swiss franc, CHF. Number seven is the Great Britain pound, GBP. And number eight is the Australian dollar, AUD. Now, those are the top eight currencies of Forex. As we're going to bring in my next screen, what's it at? My next little app. As you see, that's where majority of the market actions come in at. And let me bring up the screen. Where we at? Yeah, right here. As we see, those are the top eight currencies in the Forex market. Again, I cannot stress this. You see nothing from China's over there. The American economy, man, is super strong. Don't ever believe these doom and gloom. Oh, the dollar's never going to drop, people. It'll be like 100 years in the future. Because for one, our country is the most safest. I mean, it's not safe. I mean, in certain aspects in geopolitical, it's very safe here. We don't have too many revolutions, no coup d'etats, things like that in other countries. So the dollar's like a safe haven. So that's why 84% of the currency transaction in Forex, the US dollar is it's either the base or the quote pair, which means it's either EUR or JPY or whatever the first currency slash USD, or it's the first currency USD slash whatever USD slash euro, the yen, the pound, the Aussie, the franc, and the Canadian dollar. I forget. That's got a special name for the Canadian dollar. I forget those tricky Canadians. But back again, so the EUR is number two. That's the Eurozone. That is known as the euro. As I spoke, the JPY, the Japanese yen, that is known as the yen. GBP, Great Britain pound. See, that's the pound. The Aussie dollar, they just call it the Aussie. AUD. By extension, you want to check out the NZD, which is the New Zealand dollar. See, Australia and New Zealand, they're like right next door to each other. So when you trade the Aussie dollar, you're going to trade the Kiwi dollar also. That's what the New Zealand dollar known as the Kiwi, because they're called Kiwis in New Zealand. That's to like their little thing. They're called Kiwis. That's the franc. That's the Swiss franc, and the tricky Canadians. I think it's called the moon, the Canadian dollar. I think I forget off the top of my head because I don't really trade the Canadian dollar, which I actually should, because Canada is America's biggest trade partner. So when it making sense for like the Saudi currency, Sean, I wouldn't trade with their country directly. I mean, like I said, they have a lot of turmoil, political turmoil in Saudi Arabia. We have political turmoil here in America, but there's no revolution happening here. Ain't no coup d'etat happening. There's nobody assassinating them. There's nothing happening here. It's all kind of talk and marches and this. Over to Saudi Arabia, it goes down. They blow up palaces, and I mean, so it, all right. So the fundamental analysis of a forex, you want to check the stability of the country. That is the straight. Thank you, Jose Aquino. That is the straight. That's the first thing you want to check for a fundamental analysis of when you're doing forex. The country stable. So the eurozone, that's great. That's like 15 countries. That's stability all throughout the eurozone. Places like Dubai, it's all types of growth in Dubai. See, yeah, they're developing nicely. Yeah, the currency would be a great investment. Actually, that's a great topic, Sean. Also, how we talked about ETFs, how ETFs invest in foreign markets. That was kind of a segue to yesterday's podcast. You can look for ETFs that invest in emerging markets. Remember what we talked about? Let me bring that up. I hate to do, but that was yesterday, people. ETFs, but the ETF is the VXUS, which is the Vanguard Total International Stock Index. It invests in nothing but foreign investments, pretty much foreign stocks, foreign properties, small caps, and all that. So yeah, that's a great question, Sean. Look for ETFs that deal with foreign investments from the Middle East, or look for countries that deal with Middle East and Dubai. But it's also before for that currency. I mean, look, I don't even know what currency is in Dubai. Like I say, I stick to the crosses. To the mains. I don't really do crosses because again, between those three economies, that's the three world capitals of finance. And those are the three most stable capitals also. So what is Dubai's native currency? Dubai currency. It's called the dirham, dirham. So what would be the quote? USD/DHM? I don't know. USD/dirham. See what it comes up as. So one United States dollar, is 3 dirhams. So that's not a bad exchange rate actually. Oh, it's AED. That is their. That's their quote. I mean, that's their sign. So if you want to do forex though, always US always number one, baby. So we want to do the forex is USD/AED. Matter of fact, I can throw the screen share on so I could show you real quick. Let me do the screen share on. Hey, Sean, you always like to. Yeah, those are the questions I want people to ask, baby. That's what we do. What we do here, trader die, baby. We help them out. You got a question? I try my best. All right, screen share. So can you see what I'm saying? So that's what it is. That would be their. So tomorrow I'm gonna talk about forex brokers, the best ones to use, and this is what you call a cross because it's a United States dollar, but it's not one of the main 8 currencies, as I told you. So anything that's not in the main 8 is the USD, yen, euro. The 8 I told you. Those are known as the mains. Anything which is USD but is not in the 8, that's known as a cross. Any currency that doesn't have the USD in it is known as exotic because America, we're always in everything. So if if we're not involved, what is that? That's look exotic. So that's why it's called an exotic. So like EUR/JPY, that's an exotic because the United States dollar isn't involved. As we saw earlier, the United States is involved in 84% of all forex exchange interactions. So anything where we're not involved, it's gonna have one thing. The rate's gonna be higher because our currency is a safe haven currency. So our money's gonna be everywhere. I can't stress that enough. People get bearish on our economy. Oh, this is a bearish. This is a worldwide bear market. Okay, it's not like America economy's down and they're doing, but no, they're doing bad everywhere, people. So but not be bearish on our economy, man. Our economy comes back. I cannot stress this enough, man. We have the strongest economy in the world. That is why everything in finance is based off of what New York City does. It's not based off what Shanghai, China does or London, England. It's based off what NYC do. So when you hear any news from any financial thing and they give you a time frame, remember it's Eastern Standard Time frame. I'll give you just a little tip. Let's here go the third thing about how forex is better than stocks. Like I can't stress the liquidity, but the liquidity is based off of this. Let me turn off the glare from the tablet. Yeah, exactly. They don't take them. We make them. It's America for you. But yeah, the liquidity of the stock, the liquidity of forex. See, all right. So as I said before, New York is 1, London 2, Tokyo is 3. From 8 o'clock in the morning to 12 o'clock is always based off of New York time. The world's 2 financial capitals are open: New York and London, England, 1 and 2. That's why the liquidity from 8 to 12 in forex is nothing like you would see, my friends. So y'all, all my day traders, you guys want to get some day trading? Forex is where it's at. Also, so that's 1 and 2. So at 12 o'clock, it stops. The market closed. Forex is over there. It's done in euro. Well, it's not done because it's 24 hours, but the volume drops down a lot because it's not active trading hours. So you got America by itself from 12 to 4. 8 o'clock at night is like it's 8 in the morning over in Tokyo, Japan. So from 4 in the morning to about 4 to like 8. I forget the exact time frames, but the reason there's so much liquidity in forex is because the markets overlap with each other and they interact with each other. See, that's why forex is better than stocks for that reason. The interaction and the liquidity. See, when stocks they trade, but they don't like the New York Stock Exchange does not trade with the London Stock Exchange. Stocks that trade on the New York Stock Exchange, stocks that trade on the London Stock Exchange. Whereas with the euro and the dollar, America trades with the Eurozone. I think they're after Canada's number 1, Mexico's 2, Britain's 3. I would like to say that the Eurozone is our 4th largest trade partner, which means that that's why there's so much liquidity. It's whole countries. It's not a company. It's not Apple trading. It's not Apple and Google. No, man. Apple and Google are part of the American economy, but it's not, you know what I'm saying? That's why the Forex will always be bigger and better. So tomorrow we're gonna get into different Forex brokers. We're gonna get into I'm just gonna continue with Forex. I'm getting a bunch of questions about Forex because I always allude to Forex, and I feel like it's time for people to know about Forex. And for the guys like day trading, we're gonna do some day trades coming up, people. But I feel like we still has a lot to learn about technical analysis. I won't feel comfortable till I put you guys through a technical analysis, like a 2-part, 3-part podcast. Because when you day trade, that's what you stick to technicals. You really don't use the fundamentals. So tomorrow, it's your boy Trader Die, people. I mean, we're gonna do some Forex tomorrow. I'm thinking 8 o'clock, people, because I'm already 35 minutes in. So I know y'all tired of hearing me ramble on. So remember, 8:05 tomorrow. That's a hot date. Bring all the people that's trying to learn. Bring your brains. We're gonna go over some more Forex, the best Forex brokers to do. Exchange rates, some good currencies, and I'm gonna tell you guys some good price points on Forex, which is gonna segue to the next one after Forex, technical analysis. So this is all about a 5-part podcast, but they're different topics, but the topics are all interrelated. And I think once you learn one, you should know the other because they're really interrelated, people. So other than that, man, it's your boy Trader Guy. You guys have a good night on this Wednesday night. Think about some Forex, and tomorrow we're doing Forex part 2. All right, people, y'all have a good night. Remember, man, we gonna make it. We gonna make it.